I spent quite a few years in San Antonio myself. All right, well, let's go ahead and jump in and get started. I will do my best to keep this presentation to a minimum tonight. I love engagement. I love to get feedback, and that's why I want you to start using the chat, because if you will type in the chat at any time when you've got a question or comment. Now, I'm not going to try to keep up with the chat because I want to keep focused on just delivering what I want to deliver to you tonight. But when I get through, I want to go back to the chat and I'll pick up any of the threads, questions, thoughts, provocations that you have. Please put them in there. So do them as we go, right? And I'll come back and I'll take a look at those because I love to answer questions. I'd rather just sit here and answer questions, but I have to give you some frameworks about where this is and where we're going tonight. There's no tax, financial, or legal advice being given. I think you'll understand that. I am none of those to you. What I'm going to deliver to you is experiential. My experience, but not just my experience, but my experience with now having the privilege to work with hundreds of other high net worth, high income doctors, dentists, business owners, and their spouses. We work a lot with couples in this group because it's not clinical. We're talking about financial, but it's financial in terms of life. And that's really what our families are made of. So we enjoy the camaraderie in our community with working with couples and therefore just branching out to their families and what's important to them. The finance comes into place. Obviously, alternatives in real estate is what I love, what I know. I'm very biased towards it. It's not the only game in town. It's not the only plan in the world. But I will tell you, it works. But it works only if you have a game plan to use it. And so this is not going to be a course or presentation or frameworks on do-it-yourself. I am not the guy who's going to tell you how to go out and flip houses better or where to buy your short-term rentals or where to get your financing for XYZ rental property. I've been there. I've done all that. And it's great at a certain point in your life. And if you're of that mode, you're welcome on this call tonight. Everybody's welcome, but I'm not going to give you those tactics. Why? Because the people I love to lead today are those who are probably further along in their career path and further along in their capital base, meaning got more investment capital, and they don't want to be do-it-yourselfers. They'd like to have a game plan and do what I do today, which is primarily passive investments. Now, when I say passive, I kind of put that in air quotes because to be really a financial advocate, there's nothing that's really passive unless you just put your money in treasuries or CDs or money markets. That's passive. There's a place for that kind of liquid capital, but I'm talking about being more active in where my money goes and being active where I have some levels of control. In the stock market, I have no control. In real estate, I can decide how much control I want, and that's the purview through which I'll give you the lens tonight. Again, I'm primarily semi-active. I do have some active investments, but I own just a few rental properties today. In the past, I've owned as many as 80. I've owned a lot of carry-back notes, financing secured by real estate. Still own a mobile home park today. And then I've got a myriad of investments in other people's syndications and funds. Predominantly, that's where my money is today, but I still keep some direct investments. All is good. Wherever you are on your path, plug in tonight, and I'm glad to answer questions. I'm very good about answering questions about my opinion on the economy, where we are. I've been through a number of cycles, starting where I started back in 1980, and I'll give you some of that experience tonight. And at the end, I'll answer questions. There's no sales tonight. I'm not selling you anything, nothing to buy. There will be an invitation for gaining additional clarity for those of you who want that. But again, I'm not pushing you to buy anything tonight. I'm just here to present, give you information, hopefully to give you some clarity, some provocations that will help you with your thinking about wherever you are in your game plan for building your retirement, your exit plan, whatever you want to call it. So let me start by sharing the screen. And back to... Okay, and apparently I've got to back up again. Sorry about that. You're seeing it in reverse order. Not my plan. Let's do it this way. Let's back out. And try it again. Okay, let's try it that way. And here we go. All right, the topic tonight is how much is enough? Why that title? That's probably the number one question, maybe not said exactly that way, but the number one question that most people have when they contact me or contact somebody on our team about what we do in Freedom Founders. The question is, I don't know if I have enough. My financial advisor has never been able to tell me how much is enough. They just tell me more and more and more is better because, as you know, that's the accumulation theory. Stack up as much as you can. And then when you, quote, retire and leave active income, then there's going to be a depletion. You deplete it, you get some base return on your money and deplete, deplete, deplete. Hopefully you don't run out of capital before you run out of breath. That's the model. And it's a lot of uncertainty with that. I'm not poking fun or dissing anybody here. I just say there's a lot of models that are out there today that are just incomplete. They're just incomplete. That's all. Nothing bad. No one has any bad motives here in life, but I think you've got to plug in with people who actually created or done what you want to do. That's what I tell most people is when you're taking advice, find people that are living the life that you aspire to live. If they're not, then maybe be careful about the advice they're giving. So who am I? I was a practice owner for just over 20 years. I left practice just about 20 years ago. So you can tell I've been out of school, yes, since 1983. So I'm 41 years out of graduation out of Baylor Dental School. Real estate allowed me to leave my practice 20 plus years ago when my daughter Jenna was very, very sick. I'll give you a little bit of her story here in brief. But when she was 2.5 years old, she was diagnosed with high-risk leukemia. She suffered through that, but survived it. My marriage to her mother did not, unfortunately. So we co-parented for the next number of years, still co-parent today, actually. But it was a difficult time. Obviously, a sick child or anybody who's sick in your family, or maybe you've had illness yourself, it's very, very difficult. Health is something that we oftentimes take for granted when we are healthy and don't realize how much that part of our life is more important than anything in the world, because you can't buy your health back. You can try to access the best medical care you can, but all the money in the world couldn't prevent my daughter from dealing with leukemia, then epileptic seizures, and then finally at age 12, this was in 2004, she was facing end-stage liver failure. And we went through the whole transplant with her and the ups and downs of that. And that was the point in my life, in my career, where I really, really finally took a hard look at what I was doing, what I had created, and where my time was going to be most important. And obviously, I wanted to spend my time with my daughter. I was being pulled during that period of time in 2004 between my practice, the obligations and responsibilities, obviously, as a practice owner I had an associate, so it wasn't completely a lost cause when I needed to be out of the practice to be with my daughter some 5 hours away in Houston, practicing outside of Dallas. And transplant was being done in Houston, and all the aftercare, which was months aftercare. It wasn't like you go in and have a transplant and 5 days later you go home. You have to stay because there's much aftercare. So I'm back and forth during that year, that summer. And it was during one of those trips back and forth when I was back at the hospital with her when I really settled on where I needed to be with my life. But of course, my logical, rational brain, which typically prevails over my emotional side, and probably for a lot of you that's the same way. I'd like to have certain things in my life. I'd like to be able to do certain things. I'd like more freedom in my life. I'd like to spend more time with my family, but I need more money. I need more revenue. I need more capital. I need more return on my investment, whatever it is. There's always the but. So I sat in that hospital room when she was sick and recovering and actually took out just a piece of paper, no spreadsheet, no calculator, because I kind of knew my numbers. And fortunately, I've been investing in real estate since my first year in dental school. Just something that I had a curiosity about. I always had a curiosity about how to be a better investor, how to invest money, and real estate was what I chose early on. And over the years in my practice, while practicing, I built up a decent sized portfolio of real estate, basic real estate, mostly single family houses. As I said, I got to a mobile home park at one point, but mostly it was built on single family houses that I created the financing on, and basically just snowballed down the debt. I had to leverage everything because I started out with very little bit of money, as most people when you're young do. The best way I know today to, outside of a business, to build net worth and capital is through real estate. Business number one, secondarily was real estate. So I did both in tandem. I had a practice, which was my active income, which is what most of you have. That net worth equity in my practice, well, it requires me to be there. That's the way the world works, right? And that's okay. But at some point, you want to be able to step away. At some point, you want to, quote, retire, even though I hate to use the word retire, but at some point you're going to want to, or maybe you'll need to, like I did. And what do you have in place there? Even if you sell your practice, which I did, I made that decision to sell my practice when my daughter was sick. I penciled out my numbers and realized that I could take the gain from the sale of my practice, plus what I already had, snowball down the debt. I had a number of passive investment real estate investments, rental properties, essentially, that were spitting off predictable, sustainable income. that a portfolio of solid houses will do that. Certainly, someone has to manage them. I had managers. I still was somewhat active in that role, but nevertheless, I didn't have to be present every day to show up and check those houses. My practice got to show up every day. I've got associates and hygienists. The drill. You can only be out so long, and if you're a primary producer, which most of us are as practice owners, you can't stay away that long. Eventually, maybe you can turn it and become a CEO of a practice. I did get to that point, but only when I was ready to sell the practice. A lot learned in that regard. So the real estate was my plan B that I built starting out when I was in dental school, and gave me the option to step away from my practice when my daughter was so sick. Since that time, I've never gone back to practice. I could have. I thought I would. I thought I just wanted to buy some time during that summer of 2004. Buy some time, buy a year, buy 18 months, sell the practice. I could always go back and practice. I could still practice today. I still got my license. I probably have to take a little bit of CE to get up to date because I haven't been in anybody's mouth except mine since about 2006. But I could still do it. I thought I would. I didn't. Well, what happened? Because of Jenna's situation, margin was created in my life, margin space. It gave me permission to do something I don't think I would have ever done, right? How could you, David Phelps, in your 40s, sell your business, your practice, something you worked so hard for, all the training, all the time, all the risk, the liability, the hours, you're going to step away from that? Yet the reason was my daughter. And I never went back because the space that it created allowed me to do something different. Not right away, not out of the gate, wasn't on my vision board. But what I found was I have a real knack. Obviously, I love finance. I love real estate. I did it in tandem with dentistry. I did both really, really hard, put my head down on both of those. But in the end, real estate's what set me free, and I decided to stay with it. And I had enough other doctors who, when I exited my practice back 20 years ago plus, asked me, well, David, we understand why you left because of your daughter, but could you show us? This is a handful of people, just people I knew in the community, other doctors and dentists. Could you show me how you did this thing with real estate? Because I never told people I did real estate. It was always a sidebar. My wife knew, Jenna's mom knew, but really family knew, but no one else knew. I did nothing. I didn't put David Phelps, dentist and real estate entrepreneur on my signage. It was not part of the deal. I purposely kept them separate. I didn't want to run both together, right? So people didn't know, most people, unless they were close friends. And so I said to some of these docs who were in their 40s, 50s, even a couple in their 60s, who wanted me to show them how real estate could work or how I did it. What I told them was, well, I could show you exactly what I did starting back in 1980 when I was 22 years old, but that's not going to be the way you're going to want to do it. And not the way I would do it today either, because, well, you've got a family, you've got a business, you've got a practice, your time is more valuable. So when I started, doing it, boots on the ground, fingers on the ground, my fingers and boots on the ground, I had more time than money, way more time than money. But as you elevate through your career path, you get busy. Your time is more valuable doing what you do in your business, and you've got family. So it's really hard, not impossible. I'd say, tell people it's really hard if you've got all those things going for you, a busy practice, a family that's growing, and you're going to try to do this stuff yourself. Very, very difficult. And particularly where we are in the market cycle, which I'll get to in a little bit. The market cycle is not a great time if you're new to this and getting started, because the model that most people live off of real estate, which is get into equities, whether it's rental properties or short-term rentals, or if you want to get into syndications, whatever you think is the right thing, that model has turned 180 degrees. Ask me how I know. I've been through the cycles. So you've got to flip the switch, understand where you're coming at during this market cycle. It'll turn back around again at some point, and that's where the opportunities come. But if you get caught the wrong place in the cycle today, and you're running the model like people have been the last 4, 5, 6, 7, 10 years, you're going to be in trouble. Just let me give that to you. All right, let's move this along. So I want to ask you a question, and I've got a poll here. If I can figure out how to pull it up. Sorry, gang, I'm not sure where where it goes.
I've got it for you here, David.
Why don't you pull it up for me, Alex? Thanks. So here's a question I have for you regarding your. Thanks, Alex. Okay. For some reason, I cannot display it. If you can display it, Alex.
Yep, it should be up now. Looks like somebody's already. Yeah, here we
Okay.
go. Folks are
Okay.
filling it in here.
Okay. Well, good. All right. So there's the question. So I'll just let you run it and then just
Hmm.
kill it and share it when we've got a polling. Let's just take a look. I'm just curious to see what people are thinking right now about their current retirement plan, whether they
We'll
have one.
just a few more seconds. What concerns you most about your retirement plan? Options are: I feel like I have no control. B is market volatility. C is inflation. Will I have enough? D is unsure of other options. Or lastly, all of the above. There we go. Folks are filling it in now.
Good.
And we'll give folks just about 3 or 4 more seconds here, and
Okay.
then I'll end it and we'll review the results. All right. So David, if you can't see this, the looks like 45% said all of the above, E,
Okay.
and then 10% unsure of other options, 23% of respondents inflation,
Okay.
13% market volatility, and then about 10% said I feel like I have no control. So the significant majority here on E, all of the above,
Okay.
45%.
Okay. Well, that's helpful, and I think they're all legitimate concerns, no doubt. Whether you chose all or you chose any one of those, they are all legitimate concerns, and that's something that we spend a lot of time on in Freedom Founders and determining where we are in the market cycle and how we can hedge. It's really about hedging today, because when you're in a market bubble, which we certainly are today, we are in a market bubble. Certainly, the tech stocks, which we saw this 20 plus years ago, if you were around or paid attention or you were old enough to care, the 1998 to 2000, the tech boom. Well, we're having kind of a repeat of that. There's a lot of similarities. It's not exactly the same, but a lot of similarities. And people back then thought, well, this will go on forever. And of course, it cratered. I think it took the NASDAQ 15 years to recover from that loss in 2000. 15 years. That's a long period of time of no gain and having to try to recover back. So when there's asymmetric risk, if you've been fortunate enough to be on that ride somewhere, whether it's Nvidia, or maybe you're playing the crypto game right now, which is taking a big bounce back up, or like me, I've had some big returns in real estate equities over the last decade for sure. I mean, coming out of 2008 downturn, we had a big correction, and then buying back in then and knowing what to buy and where to buy was a huge uptick. But also knowing when to get out, or not get out completely, but to harvest your profits, right? So if you're in that game anywhere and you've had profits, you ought to be thinking, in my opinion, not financial advice, but you ought to be thinking of harvesting some of it as you go. You might leave a little bit in whatever you're playing, right? It's at this point, I'd say it's all speculation, but you can leave a little bit there. But I'd be taking as much out as I can and putting it on higher ground. We can talk about what higher ground is. That's what we've done a lot of in Freedom Founders this last 18 months, certainly where I've gone, preparing for the correction. I can't say when it's going to happen. It's been pushed further down the road than I ever thought it would, but there's reasons for that. There's a lot of fiscal dominance, meaning Congress, the Biden administration are just spending like drunken sailors. That's very inflationary, by the way. They're trying to knock inflation down, and yet they're spending like there's no tomorrow. So the Federal Reserve's between a rock and a hard place. I don't see any, quote, soft landing. I don't think it's going to be possible. People still talk about it. I just think we can't predict. No one can predict, but I hedge. How do you hedge, right? And I know how to hedge better in real estate. Some people can probably do it in the markets, the financial markets. Certainly stock and bond portfolio, there can do some hedging. That's typically what people have done in the past with a 60-40 portfolio. If the markets get heady, you put more in bonds, right? I mean, that's kind of a very standard way to go. I can do the same thing in real estate, except our bonds in real estate, meaning being the bank, owning the debt secured by real estate, I can get triple the returns I can in the bond market. And have a very low risk profile. So we do the same thing in terms of hedging. I'm not playing big games in equities today. I'm taking most of those chips off the table, and I'm gonna wait. Could I be missing the last 5 or 10%? I mean, the housing market seems to be staying strong in a lot of markets, but the commercial real estate market, it's in downfall right now. And how deep it goes, how harsh, I just feel like the longer this asymmetric risk goes up in the markets, the harsher and deeper the correction is going to be. That's typically what we see. Again, typically what we see, but all things are on the table. All right, let's move on. So accumulation versus replacement income. Again, that's the difference between what we see in the traditional financial model, your typical financial advisors, not bad people, but it's about accumulating, right? Wherever you accumulate taxable accounts, retirement accounts, tax deferral accounts, that's where it goes. I'm all about, and what I preach is replacement income. It's about the income. Now, you have to have accumulate some net worth to do that. No question about that. But what do you do with that net worth or that accumulation? Do you know how to turn it into cash flow when you want the cash flow? There's a time for growth. That's great. And there's time to turn on the cash flow. Do you know how to do that? Does your financial advisor know how to do that? I've never heard of one that does. It's still all about accumulate, accumulate, accumulate. And by the way, Doc, if your back and your neck are not hurting too much, if you just retire and practice and go a bit longer, you'll be safer. Well, that's the safe bet, right? But I don't think that's really the game that most of you want to play. Think of yourself as the athlete, the premier athlete. I mean, the training you've gone through, the work that you do, it takes a beating on you. You all know that. If you've been doing dentistry for 10 years or more, it starts to wear you down. And so you're like the premier athlete. If you're not doing some good things with your capital base and your money early on, then you're going to get out on that treadmill way out in 25, 35, 40 years of trying to make headway. And the fact is, you miss all the inflection points because you've been told a certain model. And that's a sad thing, because I get to talk to these doctors who are hardworking, put in their years, did great service, had a great lifestyle for the family, but there wasn't anything left on a plan B to build. And they sell their practice for, what they can get today. And that typically is not enough if they haven't done something else more strategic in their planning. So again, I'm biased towards real estate. I know how it works, and I assume that that's why you're here to at least learn about it. So the uncertainty of how much is enough is the problem with the accumulation model. It's not there. Versus having the specificity of a freedom number. What's the number you want to hit? We do it in Freedom Founders by milestones. We start with how much in a year of replacement passive, not you working for it, income do you want? Okay, well, I'll show you how we reverse engineer. How much net worth capital do you need to deploy in certain asset buckets to create that specific number? Now, if you don't need a specific number or need so much because you're going to be practicing for a number of years, then you can do a hybrid. You can get some numbers of cash flow coming in and then some in growth. But it also depends on the market, right? If the market's not providing a lot of growth, which I don't think it is right now, I think it's really on a deflationary mode temporarily, and then we're going to go back to inflation. You've got to understand how the big waves work. You can't time the market, but understanding the waves is the way to make this happen. So the depletion model out of the accumulation model is what has most people afraid. Because if that's the model, it's like, well, how do I know if I'm going to have enough, especially with inflation today, which has been proven it's not transitory. And I totally don't think it's going to ever go back down to 2%. I think it's going to be very volatile in the years ahead. Why? What's the game changer today? It's the massive debt. The debt that we have today, as opposed to just going back to 2008, it's quadrupled. And it's going up by a geometric amount. You see it. We're at 34 trillion and counting. I think we're going to hit easily 40 plus trillion, maybe 50 trillion by the end of this decade if there's something doesn't change. And I don't see the politicians change anything. They don't even talk about it. If you have sustainability of cash flow that comes from the asset itself, like the golden goose, don't kill the golden goose, don't chop the golden goose down, just let the golden goose keep producing the eggs, the cash flow, then you don't have to worry about it. And if your golden goose is tied to some aspect of inflation, then that also will keep up with the pace of whatever inflation is. The accumulation model, which is typically built in the Wall Street model on financial assets, there's just a ton of volatility. You know it, you see it, you sense it. Even if you've been riding it high, you know that the next shoe is going to drop, and every time it does, it's very painful. It takes a long time to ratchet back up. I'd rather have something more predictable and sustainable that has minimum volatility, and I can have more control over where I put my money, which you can do in real estate. It's not, if you have the access points in the internet network, it's not hard to do. So predictable income. I want predictable income based on an asset class that doesn't have the same volatility that the financial markets have. Chasing yield. Again, I get a lot of people that like, well, how much can I get in real estate? Well, I've heard that, you can get, mid-teens, high teens, IRRs, multiples. Yes, you can in the right market with the right operator and the right asset class, but you've got to really dial it in and know exactly what you're looking for, especially where we are today. 3 years ago, 5 years ago, yeah, you could almost throw your money at a dartboard and come out okay, as long as there wasn't a fraudulent operator, or even if you're doing it yourself. Many of you probably have done that, and you got some great returns. You locked in some low interest rates. You hit the mark when all the money was flooding the market and the assets have gone up. Great. But now what do you do? Because that's not sustainable. That's not sustainable. You've got to know how to take the equity that you have, protect it, and then keep it working for you in all market conditions. Rather than chasing ROI, you've got to learn to manage the risk. And I always tell people, just take what the market gives you. Sometimes it's not a time to be chasing those same yields of yesteryear. You've got to be more prudent. I keep a fair amount of money liquid today. I've got money in short-term treasuries. It's not sexy, but you know what? It's safe. And it's also liquid so I can move it when the opportunities come. I can move it very, very quickly to where I want to go. So I don't have a problem, even though people say, well, if you keep too much in liquid accounts, aren't you losing to inflation? Probably so. But I'd rather take that minimal loss rather than a big downside loss by playing the equity game. And I can always come back and pick up the discount on the equities. And you can do that in the financial markets as well. I'm not saying you can't. Just real estate's the one I can watch. It's the one I know. I always say to people, invest in what you know. If you know the financial markets and that's your game, you should go do that. Learn it well. Real estate to me is a lot less complicated, and it's a place where I can play as a retail investor. You know, the financial markets, there's so much money, so much manipulation there. As a retail investor, I don't really know how people do it, if they really can. But in real estate, it's an inefficient marketplace, and that's what gives us individuals the opportunity to play ball against big money who can take over larger markets. The other disadvantages of the tax deferral plans, your typical 401ks and IRAs, higher future taxation. I can say without a doubt that taxes are only going to go up. So you're deferring tax to pay tax at a higher rate later. Not sure if that's a great plan. It's a lockbox. You put money in those tax deferred accounts, you can't take the money out without a penalty until 59.5. So you don't have the use of that money. It's locked up. And if you had a better opportunity, maybe just even expand your current business, which is your primary engine, or other opportunities that might be better than where it is in Wall Street, can't take it out. It's locked up. It's also a place where I think people have put way too much emphasis because that's what everybody does. It's what I call groupthink or herd mentality. Your CPA, your financial advisor, hey, I know you want to save on taxes, Dr. Jones, so we can put you in a 401k. We can do a cash balance plan. If we max out the 401k, we can do a defined contribution plan. We can do all these tax deferral plans and we'll save you that money. Well, we'll defer the taxes, not save you, right? And everybody wants to do that because it's like, well, if you're stupid if you're not doing that. I just think it's the other way around. I think the more you follow the herd mentality, the more you get average results. I've been the opposite my whole life. And I can say, I'm free. I've been free since I left my practice when my daughter was sick in 2004. Now, that wasn't the final number that I've taken away in my net worth, my cash flow. No, it's continued to grow. In fact, it's grown faster since I've been out of practice. I needed the practice to be the catalyst to give me the money to buy leverage the assets and then pay the debt down. I used a lot of excess income that would normally have gone to a 401k. I just paid down debt. Very safe to pay down your own debt, by the way, very safe. I wasn't playing any games with that. And I could ride right through the cycles with good, solid, operating rental property. And that was the key. It wasn't sexy, just affordable rental property. And 2008, the last big one we had, didn't affect my cash flows at all. Values might have probably gone down 15% in Texas, not a whole lot, but I wasn't a net seller. That's the thing about real estate. If you got a good operations at cash flows, you don't really care if the values go down. But if you're leveraged to the hilt and you don't have good operations and the cash flow's not there, that's where people get in trouble. And more people will get in trouble. They're in trouble right now, many of them, because they just don't know what they don't know. I mentioned the higher tax brackets. Also, in terms of your tax deferred plans, there's no long-term capital gain preferences. And as I said, on the distribution, whether it's to you or to your heirs, they're going to pay at their current tax rates, whatever those are, and they're going to be higher than they are today. Lastly, stepped up basis. I think hopefully most of you know what a stepped up basis means. Any assets you own, whether it's financial assets or hard assets, when you pass away, your heirs inherit those assets at the market value that day that you pass. So it's called a stepped up basis. Your basis is whatever you bought in at. And so the profit, if you sell an asset, is the difference between your basis, what you bought in at, and the profit. And you pay tax on that based on short-term or long-term capital gain rates. Well, when you die, your heirs get a stepped up basis. So if they sold those assets the day you died, there'd be no tax. Now, if they hold them longer, which they can, then their basis starts that day you died. So it's stepped up, and then they can still have profit up here. But all that profit that you carried all your years, they don't have to pay tax on it. But they do if it's in an inherited IRA or tax deferred account of some kind. Yeah, they do. So you lose that. You lose a lot of benefit. It's not a good generational wealth transfer mechanism. In fact, it's the worst one. The only thing I find good for tax deferred accounts is to give to charity, because with charity, they don't pay tax. So if you've got money there, you're going to give to charity, use it that way. But otherwise, I wouldn't do it. And also the other benefits you lose are the other tax benefits, depreciation, cost segregation. So I mentioned long-term capital gain treatment and exchange opportunities. In real estate, we can exchange our profits into other properties should we so desire. And again, it's a tax deferral mechanism, but I can do that until the end game, which is when I die, and then go back to stepped up basis, and we haven't paid any tax on those assets. I don't need a tax deferred 401k plan. I don't need one, never needed one. I'd rather have the money where I can use it. I'll pay tax and just be done and have what I call unfettered money. No rules, no games. And the other thing that we didn't put on this slide, which we might add, is I believe, and I'm not a conspiracy theorist, but I truly believe, because of the debt situation this country is adding on to every day, that there's going to be come a time when the government is going to call a crisis, and they're going to say to everybody with retirement accounts that are liquid and easy to get to, they're going to say, we're going to take your accounts. I'm going to give you an IOU back. Dr. Jones, you got $2 million in your 401k, whatever, blah, blah, blah. Fine. We're going to take it. We'll give you an IOU. It's still yours, but we're going to take care of it for you over here, and we're going to dole it out to you the way we see fit. People say, oh, David, that'll never happen. I say, go back to 1933 and see what President FDR did with gold. Do you know? Yeah. They confiscated all the gold back in 1933. You couldn't own gold legally in the United States from 33 to what, 30 some years. Why? There was a crisis. They wanted to free up liquidity in the marketplace because of the great financial depression back then. So don't say that it'll never happen here. There's a lot of things that have happened in this country in the last 5 years, 10 years that I thought would never happen. So I think you've got to be very careful about playing the game that the government holds out to you and says, this is the carrot, come get it, come get it. They're just putting a mark on you. And if you've got a lot of assets, you're that evil capitalist, there's no one's going to feel sorry for you. You see the attack on all of us as capitalist entrepreneurs all the time. Big attack. They're looking at wealth taxes, all kinds of ways to take your money. I think you're better off to have tangible assets that are harder for the government to get. They're going to take the low-hanging fruit first before they come after other assets which are harder for them to take. So more return on investment is not the answer. Here's the freedom number. It's very basic, but it's what I did when I was with my daughter in the hospital back in 2004. I figured out what I needed to sustain my current obligations to my family. That's it. Not a retirement number, not replacing my active income as a dentist. What did I need to sustain our lifestyle in a margin, a 20% safe harbor margin? And as soon as I saw I had that, I said, there's no question, I'm leaving the practice. I'm going to focus on my daughter for at least the next 12 to 18 months. As it turned out, I just took a different direction, and I've not looked back. I've not regretted it. The main thing is to take change in your own hands. You've got to give yourself permission. And I know it's not easy. I know it's scary to change a model that you've been told is the best model. Just stay on it, stay on it, stay on it. But I'm just telling you, the people who I know through my many connections over the years, people who really get free in their life and have options, which is what freedom's about in my mind, options, not retirement, but options. You've got to have assets that produce income when you sleep. Does that make sense? And you start building it little by little, little by little. That's how it works. So how much, in this case, do I need to achieve, say, $150,000 of annual income before tax using my freedom number calculations? Well, here it does depend on what kind of return you're going to get. But again, I'm not shooting for that 15 or 20%. Let's just use a nominal number. Let's look at some low numbers first. So if you needed $150,000 at 1% return, math's easy. It's $15 million. That's how much capital you need to invest. That's a lot, but you're not putting it out there anything very risky, right? At that point, so almost under your mattress, I guess. 2% return, you need half that, $7.5 million. 4%, half of that, $3.75 million. See how quickly the amount of capital you need goes down when you just start to increase your interest rate return by a little bit. Nothing magical, nothing of a exuberant amount. 8%. That's dead easy in real estate without taking any risk. I'm down to 1.875, down from 15 million at a 1% return. And gosh, if I just go to a 10% nominal return, super easy. And not in the, this is not even in equities. I only need $1.5 million of capital. So just do your numbers. If you need $300,000 before tax, then you need a 10% return, you need $3 million of capital. It's really basic math. The question I know you have is, well, yeah, but where is that exactly, David? I've owned some rentals and there's no way those I'm going to get enough rentals or XYZ. I understand that, but I'm just showing the basic math. This is the construct to understand. Before you get tactical with anything and trying to throw your money around, you just got to understand, what am I trying to get to? And if you build it this way and do it safely with what the market gives you, then you're not going to take these big hits and these big losses and have to go back and start over again. This was the first house that I invested in with my dad. 1980, yeah, 44 years ago. This year in June or May or June, we bought that house. This is how the house looks today. We did some things to it, but we bought that house for $83,500 back in the year 1980 from an estate sale, and it cash flowed. It's worth over $1 million today. I don't still own it. I owned it for 4 years and harvested my half of the capital gains of 50,000, harvested my 25,000 and took that out and parlayed that into more real estate and built what I had off of that little nest egg. And this is the property that generated it. While I was waiting tables on the side, nights and weekends while going through Baylor Dental School, this house was working for me. The management I put in this house was minimal. I had 2 tenants during 4 years, so my management was minor. And the hours I put in waiting tables, which I made pretty good tips back in the day, probably $15, $16, $17 an hour tips back in 1980. That was very good. But nothing came close to the ROI or the time value I got from owning this property. That $25,000 with the minimum amount of time I put into the acquisition and management. And that's where the light bulbs went off. I thought, there's something here. I got to keep doing this. And so I did. And again, some 19 years later, that's what set me free. It gave me the way off. And then today, I still love it. And I think it's the best game going that I know. And I show other people how to do it. So I've got another question for you. Alex, you want to pop this one up? Concerns about real estate investment. I will put this one up. I'd just like to get your thoughts on what you all are thinking about real estate. Maybe some of you have done it. Maybe some of you are thinking about it. But you probably have some concerns either way about that.
Yep. Here we go, David.
Okay.
All right. Yeah, it looks like actually some folks jumped ahead and filled some of these out when we last put the poll up. So my concerns about real estate investment are A, don't understand how it works. We had 36% respond with A. B, don't have enough time. 20% responded. C, don't have access or don't know where to start. That was 28%. And then lastly, real estate is about to take a big hit, came in at 16%. So 36% don't understand how it works. That was the most significant response by far. Okay, well, great. Well, I appreciate the responses. It kind of tells me where people are. And those are all very valid concerns and questions that I would have as well if I was looking at something from the outside looking in. Knowing historically that real estate has always been part of the most wealthy people's portfolio, at least part of it, right? But again, the question is, how do you do it? How can I do it when I'm busy? It's a scary time in the market. All those questions I think are valid. So I'll try to address some of those as we finish up here. I'm going to try to keep this tight so we can answer some questions. So again, as we're going through, things come up, put it in the chat and I'll come back and I'll take as much time as we need to on the back end to answer questions for you. As I said, I've got an invitation for you as well, for those of you who want some additional clarity on where you stand. So in Freedom Founders, real quickly what we do. Again, this is not a sales pitch. Just going to tell you what we do because people always ask, well, how does Freedom Founders work? So number one, we curate the real estate deal flow opportunities. You don't have to go out and do it. We don't send people, we don't give you education, send people out and go, well, go find some deals and then we'll talk about it. No, we actually bring that. We have an entire investment review committee, which is comprised of a securities attorney on retainer and a chief financial officer on retainer. These are separate people who combine to do the due diligence and the vetting at a very high level.
Nothing's guaranteed, of course, but they really look at it. There's no other group that I know of anywhere that puts in what we do on this. The fees that runs to do this on any individual fund syndication or investment run typically anywhere from $10,000 to $15,000 per. That's how much we put into this. It's very important because if you don't understand who the operators are, don't understand what their background looks like, we run full background checks. We have the attorney look at the structural legal documents to make sure they're not totally in favor of the sponsor, which most of them are. And I'd do the same thing if I could, if I'm a syndicator, but you need protection from the passive investor. And the big piece that nobody does, nobody has a financial person get in and actually get access to their books and their accounts and talk to their CPA or controller and see exactly how organized they are. And you would be amazed how many people who have gotten by in the markets in the last few years because the markets have been very kind, but sloppy operators. I'm not saying fraudulent. There are fraudulent people out there, but I mean just operators who are just sloppy and got by because of the exuberance in the market. You don't realize how many are operating out there today. It's a scary time to be throwing your money out if you don't know where you're going. So curation is one thing we do very well. A proven system to create that recurring cash flow. As I said, today we're focusing like a lot on cash flow. Why? Well, I call it, this is the show me the money economy. I'm not in the game right now for someone telling me that they're going to put my money into a syndication or an equity fund, and in 3 years, 5 years, 7 years, then I'm going to get this big return. I don't think most of them can do it unless they're buying something at a deep discount today. And those discounts are coming, but they're not here yet. So if you're still looking at people who are providing the typical multifamily syndications out there, you better understand that they're not looking at the same model that they had 2 or 3 years ago. And if they're not talking about that, be very, very careful. They make a lot of money up front on acquisition fees and management fees before you get a dime. So just beware. I'm not saying they're all bad. I'm saying there's just a lot that don't know what they're doing. You need a blueprint. You need a game plan, and you need a specific game plan for you, not just some cookie cutter. Well, here's what you do. I'm talking about for you, your family, your goals. So if you don't do it for your goals and you try to follow everybody else, then it's not going to make any sense. So we do a customized blueprint for every one of our members to show them how to build this. And again, without being a landlord, dealing with tenants, contractors. For most of you that are anywhere in your career with a family, that's not the game you want to play, and particularly not where we're on the marketplace today. Maybe if you've got time and the market corrects, you could go out there and do okay. But I think most of you probably don't want to do that because your time's more valuable either with your family or in your business, which is your primary engine. We have a community. It's very like-minded. We're very careful about who we let in, both from a deal sponsor and operator side, but also the same amount for our members. I'm not trying to grow or expand Freedom Founders to some massive community. I love the fact that we have the caliber of people we have that are all have the same values. It's like the Cheers, the old sitcom Cheers, where you walk in, everybody knows your name and everybody's like friends. The comment we get all the time is, why is everybody here so happy? Why are there smiles on their faces? Because they've been enlightened to know that they can take control of their life. No matter where they are in their practice, whatever is going on, they know they've got a game plan now. And that's what kept me afloat during all the years I was going through my situation with my daughter, Jenna's health, and then the divorce. And then on top of that, I sold my practice once and had to take it back and sell it again. All those things were like very, almost not fatal, but they felt like they were fatal, right? You know what I'm talking about. But because I always had that light at the end of the tunnel, I knew my plan B, no matter what my plan A was doing, plan B was going to get me there, and it did. The main thing we help our professional practice owners with is solving the problem of getting their time back. And I don't mean just the retirement, getting the exit. Exits, a lot of what our members are doing. They come in on the precipice of or wanting to in the next 2 or 3 years. That's great. I've got a lot of young members in their late 30s and early 40s who have no game plan to retire. They just want more time. They want the freedom to have options today, still own the practice, but not to feel like they've got to drive it all the time so hard, or give them the option to bring in associates, or maybe even bring in some partners. I mean, those are all pieces of the puzzle, but when you've got a plan B, you can take a few more chances to optimize what you want in your life. And for most people, that's more time, not in 20 years, not in 30 years, not at retirement, but time today before your kids are gone from those 18 summers you typically have them for. As I said before, for me, my history of doing this, real estate's one of the best passive income generators that there are. Your business is your best active income generator. At some point, you're going to want to turn that equity into passive. I don't know anything better and safer than real estate if you know what you're doing, you do it the right way. As I said earlier, most high income earners, high net worth earners, are people that have some amount of real estate in their portfolio, but how can you do it? Okay, you're busy, right? I just told you it probably doesn't make sense for most of you to go out and take the courses and go to the seminars on how to go out and do fix and flips or buy rentals or short-term rentals, which was the fad. That fad's over, by the way. So don't go there, especially in the uncertain economy we have today. It's trickier than ever right now. You have to know where the holes are, where the inefficiencies are, where the voids are in the market. And there are voids, but how do you know where they are and have access? All the other people out there that are well-meaning and teach young docs how to go do it themselves, they're relying on the model that they've known the last few years. And unfortunately, that's not going to be the model that's going to carry the weight. That model may come back, absolutely, but it's not there right now. It's all about understanding the cycles. And I just say that most people have not gone through a full cycle. You've got to go through a full cycle, all the way up to the peak and all the way down to the valley and back up again to understand how this works. And if you talk to most people, they've only gone through the last half of the cycle, all the way up. They haven't taken the downfall yet, and they don't know what's coming. So it's a very, very dangerous time to be latching on to those old models. Many become what I call accidental landlords. They want to try some things, or maybe they sold instead of selling their home, they kept a previous home and decided, well, I'll just rent it out because everybody should have real estate. And again, big mistake, because it was probably the wrong place, wrong time, wrong house. Should have done something more with the equity. But again, when you have few options and you want to get in real estate, then you do what? You take whatever's there on the buffet table that you can see and understand. And that's the problem today. Most people don't have enough comparison and contrast to see there are many options available today. We peel the layer by layer in Freedom Founders, so you can see very, very deep the different ways you can invest in real estate on a semi-active, more passive basis and be very, very safe and take what the market gives you. We're like a shortcut. We fold time, we collapse time for people who want to get involved in real estate. We don't do it for you. You don't do it yourself. We do it with you. And that's the fun part for me. We do it with you. You've got a community that backs you, that gives you the constructs and the information that you need, enough information so you can make prudent decisions, and you're becoming your own financial advocate. That's a skill set, by the way, that you will never, ever have to give up. No matter what the economy does, you'll always maintain that skill set. And that's one that you can teach your kids as well, which they're going to need more than we did when we were growing up. Understanding and having financial acumen is going to be so important going forward in this world. We help you by giving you access to vetted real estate investment opportunities, helping you build that passive plan B recurring income so that you can start stepping away when you're ready to, and when you're ready to retire, you can do it with confidence that you do have enough. In fact, you'll see some members of ours, I've got a few to show you, that they always talk about how their retirement account nest eggs are increasing, not depleting. Big, big difference in confidence. And they have something to give away or pass on to the next generation should they want to. You've got access to our entire community of practice professionals who are successfully invested in all the real estate today. It's social proof. It's social proof. We've got tons of social proof. We're a very transparent community. We help you clarify a plan and a clear path towards the future, the specific future. Specificity is key. What do you want? When do you want it? And we do it both by passive cash flow, but also by the time you want. Time's so important. We combine the two together. How much recurring income you need to take more time off, to have the permission to take more time off, or change your business model, or take your foot off the pedal, or sell out if you want to, or sell part of your practice out. You can't make those decisions until you know what you're going to do with the capital, right? Otherwise, it's a scary move. You're better off just staying in your practice and keep running it if you don't know where to put the money. And you can finally get away from the volatility of the stock market. It's great when the market's going up, but you all know what goes up, it's going to come down. It's always reversion to the mean, and that's not a fun place to be if that's where most of your capital is at. It's great up, but again, if you don't know how to harvest it or move it to higher ground at the right time, then you're just going to follow it back down again. The buy and hold mantra that a lot of advisors give, I think it's ridiculous. You know what? I'm a long-term investor, but I don't just sit on something for 30 years. I mean, you've got to have some options to know a little bit where you can move the money when you see the big waves of the market. Again, not trying to time it to an exact date. So why does this all work this well? Again, back to clarifying a plan with a strategy. Individual couples talking about their life, what they want together. This is where the magic happens. If there's magic, it's not just a singular doc trying to carry the financial torch, him or herself. It's doing it together so that you've got a plan that coexists, and the conversations that come out of these blueprint weekends are amazing. And then it's really easy to reverse engineer where are the assets, where are the capital, and what can you start redeploying and reallocating to make sense so you can start building this game plan based on cash flow. You get a clear real estate investing plan, personalized to your goals, your values, your life. Again, it's individual. Crystal clear on how much is enough for your future. That's the game changer. When you start to see what that number looks like and you can control that number, build on it, it changes everything. It changes your whole demeanor. People who are not even what we call free for life in our community, in 3 months, 6 months, their whole attitude has changed because they now finally, for the first time in their life, they see a game plan unfolding in front of them. And it's not like they're doing it by themselves in a silo. You're with, hundreds of other high income doctors and professionals who are on the same path, many ahead, but many right there with you. And you have the confidence to know this actually does work. People have been in our community for 5, 7, 8 years now who can say, yes, this works. You get a chance to really evaluate what investments you already have. Where is the various buckets of your capital? Where's the equity you have right now? Certainly you have it in your practice until you're ready to harvest your practice equity. Well, that's off the table, but at some point you'll have that. But what about other allocations? Some people have whole life insurance, annuities. You may have taxable accounts, brokerage accounts, which is fine. I'm not trying to say you should move everything. Your retirement accounts. A lot of people have substantial amounts in their retirement accounts in those lockboxes. You can actually self-direct those accounts into alternative investments by just using custodians that are licensed to do that. Many people, I'm surprised, don't understand that you can do that, self-directed accounts. Some of you probably do, but that's a way to at least take the lockbox money and put it in assets that are not volatile in the market. Big thing that we help a lot of our members do. Basically, this community helps people to get over that paralysis of analysis. Well, I'd like to do real estate, but I'm afraid. I don't know how. I went to a weekend course. It sounded great, but I don't know how to get started. I don't want to lose money. I don't want to upset my wife. All those normal constraints when you're with a community that's already done it. Even the skeptical spouse, which we have many who come for the first time, they get to talk to other spouses who have been with us and they go, okay, they come back to their husbands and go, we got to do this because they see the proof. The proof is there of what's been achieved. So the Blueprint Days are a big part of our new member onboarding, where you get clarity and a plan. The small group, where we focus on individuals. These little, we call them freedom seats or hot seats after we've gone through the training and break down where their assets are, what their goals are, how much passive income they want, how much time they want. We break all this down and bring it to a head and then work through them as a small group and give them a plan they walk away with. All those sheets you see in the background, that's all my scribbles where I'm working out their plan for them individually. And they take pictures or take those home. That starts their blueprint progress for the first 90 days outside of their onboarding with Freedom Founders. Dr. Cody and his wife, Haley Cowan, 2 boys. Cody is 44 years old. He is free for life in our community. He has achieved that freedom number where he's got enough passive income to sustain his lifestyle. Doesn't replace his active income. He still makes a lot more money in dentistry, but he's got that base covered. That moat is covered. So if something happened to him, disability, or kid got sick like my child got sick and he needed to get out, cash out, take time off, he's got that passive income there as the float. And it's just building from there. Again, this is not do it yourself. It's done with you. We're helping you. We're helping you be the advocate for your financial future. Step 2, curated, vetted real estate opportunities. I talked about our investment review committee and the fact that my network is what brings the opportunities to us. It's not a pitch fest. I don't let just anybody in. They go through extensive screening. Sometimes we go through months and months before we let somebody in, of going down and checking a ton of boxes on the legal and financial side, background check side, before I'll let somebody in. And they've got to bring something unique to our community, and we get a chance to structure it legally the way we want it structured. When you're out there on your own investing in a fund or a syndication, you don't get to tell them what you want to do. They basically say, here it is. And if you want to invest in it, here's what it looks like. Well, we don't do that at Freedom Founders. We have the leverage of a community where we get to go back to these deal sponsors because we have the leverage of a lot of capital. I'm not saying they'll do everything we want, but there's more of a meeting of expectations where we get a lot of things we want. And if we don't get what we want or what I think is prudent for myself and other investors, then we don't do it because we have many, many other opportunities. People are knocking on our door all the time. We probably take 1 out of 10 over a period of time that knock on our door and say, hey, I've got something great for your group. I'd like to talk to you about it. Well, there's a whole process we go through. You'd be impressed. This is, well, actually, this came from this last weekend. These pictures came back. We had our due diligence trip up in Denver. And while we were up there, we just thought, well, let's just go skiing and snowmobiling. So we made it a due diligence trip and a and a trip to the slopes at the same time, which is what I call a lifestyle business. You see, I have to go a lot of places to talk to a lot of people about real estate. So do our members. And if you can combine that with travel you already want to do, well, there's good ways to write this stuff off. Again, a lifestyle business. It's really what you want. So this saves you time from having to go search the market for your own deals, which is very, very difficult. And you don't have the expertise and probably not going to spend the money that we spend curating and vetting these deals. So you get to leverage our community and my network, which is extensive because I'm plugged into lots of real estate groups. I've been doing this for, 44 years. I'm a player in there and I can curate out the people that I want, or people come to me because they know our reputation. You get to invest in whatever you want to, but you've got the education, the frameworks built around your blueprint so you know what to do. You're not just left out there, well, here's the buffet table, just go grab something of everything. No, that'd be ridiculous, right? Just like if you're on a diet, you're trying to be more nutritional, someone would be there to coach you and say, well, take some of this, but don't take that. It doesn't fit with your plan, your diet, your plan, whatever you're trying to gain is not over here, it's over here. So you've got that backdrop and you've got way more to choose from than just that Facebook syndication that came out and go, well, I better grab it because that's all I know and all my buddies are doing it. Probably the wrong way to go about looking at your investments in real estate. I mean, I think you know what I'm saying, but if you don't have the ability to compare and contrast, then you're stuck with, well, if I'm either I do it or I don't, right? Probably better you don't, but that's up to you. You can enter into these deals with a lot of confidence because, again, you got the social proof of the room. These are long-term relationships with our operators. This isn't just fly-by-nights who come in for a meeting or something, say, well, here it is, and then they're gone and we never see them again. No, this is long-term relationships. They stay with us year after year after year after year because they've been tested and they know our group because they want educated, sophisticated investors because it's easier for them to work with people like us than the mom and pops who they have to answer questions every day and don't understand what they're doing. And it's just, they love our group because of our reputation, the education and sophistication we bring. And we love them because they give us the better deals and the deals we get to structure to make it win-win for us and them, not just in it for them. And again, you're investing with other professionals like-minded. You're doing it together. The community, the leverage is huge. You've got that collective bargaining power. Greg and Jackie Linney, been with us now 5 years, became Free for Life about a year and a half after they joined in 2019, practiced down in Houston, and they went right after their freedom number because he wanted to sell the practice. He wanted to hit that replacement income right out of the gate. So through education frameworks, we showed him where to put those funds. And once he hit that number, then he can go into equities again. We put him into cash flowing instruments. And as he said right here in his quotes, they're not depleting anything. Their investment income sustainable. It's predictable. They're living their life. They travel the world. They've got a vacation home in Palm Springs and live in Houston, but they travel everywhere. They're loving life. These are all people part of our community, by the way. These are not people that I pulled out of a magazine. These are real people. Number 3, you get to tap into our network. I talked about the network is so huge. If you're going to invest in alternatives, access is everything. It's everything. You've got to know the right people and have access to that. So we're looking for practice professionals, business professionals with an average, give or take, there's redeeming qualities, but average of $1 million, not cash in the bank, not money in money markets or treasuries, but assets that we can help you look at through a capital organizer and see if you've got about $1 million or more. And most of our members come with, well, I'd say an average deployable in our group ends up being probably somewhere around $2 to $3 million, but you can come in with $1 million. I think people who are on the brink of, well, should I, shouldn't I? That's where having a discussion comes into play. We're very discerning about who we let in because I want everybody who's a part of Freedom Founders to be successful by their definition of success. You will not find anybody out on the social media, Google my name anywhere. You will not find anybody who says negative things about me or our group because that's what we stand on. I only want to work with people who I know they're going to get success. Part of it's how much capital you have. Part of it's how far you are down the road in your career, in your practice. What kind of debt you still have. Doesn't mean you have to have debt paid off, but what kind of debt you have, what's your lifestyle, what's your burn rate, and what are your expectations? And if those things don't all align, then I'm going to tell you, go back and fix this, and this. I'll give you clarity on what to do. And when you get those things fixed, if you really want to do it the right way, then you come back at that point and say, okay, now we're ready to go. And I push back people all the time that are well-meaning good people, but they're just not ready for where we are because it's like hanging a carrot out there and say, well, real estate's going to solve all your problems. It's not going to solve all your problems, but at the right time and right place, it will get you the freedom you're looking for. We're looking for people who want to learn. Again, this is not where you come in and David Phelps or our team tells you what to invest in. You need to be prepared to learn. You have to put some time in on this. You're gaining skill sets, and we don't spoon feed it to you, but we have a great onboarding and education format that gets you up to speed very, very quickly. But you put some time into it. And if you want to do this on as I said earlier, on a more passive basis, you don't want to go out and do your own deals, then we're ideal. If you still want to do your own deals, then this would not be the group for you. Bob and Gertrude, they were with us in Denver just this past weekend. Great couple. I think they've been with us since right during COVID. Both practitioners in their practice, and they wanted to get out badly. Gertrude, great lady. She had some disabilities where she wasn't able to practice to the level, and so her husband Bob was carrying the weight. And they had financial advisors who basically told them, you got to keep practicing because you only have so much, and it's going to go down over a period of time. They came to Freedom Founders, and we helped them turn their life around. And in 6 months, their practice was up for sale. They sold it within that year, and they moved out of California to be with their family. And as I said, saw them this last weekend. They had their son and daughter-in-law with them. We encourage our members to bring their younger adults, we call them the next gen, to our meetings, due diligence trips, because we want that skill set in financial acumen to be passed on. And they were beaming about their kids, about the questions they were asking at their young age. And I think they're in their 20s, and they want their kids to have those skill sets to be able to understand how to invest their money in whatever career path they're going down. So it was great to see them. You can read the testimonial. I don't have to read that to you, but they basically turned their life around with what we show them how to do. So again, who's Freedom Founders for? You're a good fit if you've got a coachable attitude. If you're know-it-all, then probably not a good place. We like people to ask questions, but if you've got a plan or you think you know everything, then probably not a good place. As I said before, you don't have to have your debt paid off, but it should be well managed. Well, what does that mean? Well, we can help you look at it and see if you're in line with what we think is good. As I said earlier, you're not looking to be active. You want to be passive. It's the way I want to be. I value my time much more today than I did 20, 30, 40 years ago. Around $1 million of capital, again, we can help you look and see if the capital you have is deployable and what would make sense for you. So again, not cash in the bank, okay? You may have that, but many don't. They have other equity that they could move and get a better return and a safer return on it. You understand the value of real estate, but you're just unsure about how to get started in it. You'd not be a fit if you're really in growth mode of your practice. You're younger in career, and you really should be optimizing your capital, your time, really in that practice, because that's going to be the thing that really moves the needle for you. At some point, then you're ready to go into Plan B, outside investments. Again, we can help you look at that if you're not sure. Happy to do that. Happy to do that. If you want to be active versus doing it active or being a do-it-yourselfer, then again, we would not be the group for you. I know how to do that, but that's not the group that we have. If you're looking for, high returns, David, you got to be able to show me how I can get 20%. Well, no, I'm not going to show you how to do that. All right. You got to go play the crypto or NVIDIA. That's where you got to go for that. Nothing wrong with that if you want to play some money out there, but that's not what we do in Freedom Founders. If you're trying to grow a capital base towards $1 million and you're partway there, again, if you've got a highly profitable practice and you're throwing off, more income to go into investments, that could be a redeeming factor where you don't need $1 million. So again, we can look at balancing that if your circumstances dictate some special conditions that might be an advantage for you to get started earlier, or maybe not. So I'll recap how we can help you. Co-create a personalized investment plan and strategy, as I said, specific to your goals, you and your spouse's goals. Will save you a ton of time. Time is the thing we can never get back. And so instead of trying to do this yourself, we'll save you the time, help you curate, and give you the education you need with vetted real estate opportunities. Skill sets you need to understand how to maneuver in the uncertain economy. And then the big part is the network, the access that you'll have to, again, the curated people that we bring in. These are people, and I'm talking about the sponsors. Members are the same way, but our sponsors, they are top shelf people, not in what they do. They've got that track record and the due diligence we've done, but they're people that you'll appreciate because of their values. And I speak highly of values because that's who I am. I don't want to invest with people who don't have my values. A brief graphic of the freedom journey. Starting point, we look at your freedom number. What's that look like? We get very specific on that. Then we'll build a plan, develop that timetable. How much passive replacement income do you want by certain periods of time? And we reverse engineer. Here's what we need to do that. Here's what you need to add to the bucket. And here we go. That happens through education and, again, the access to investments. The goal early, not in 15 years, but the early within a year, we want you buying back more time. And most of our people get free for life in 3 to 5 years. 3 to 5 years where you've got that moat, that base covered, whether you want to practice or not, it's covered. And that gives you all that peace of mind, takes the stress off. And then you can start thinking about, your impact in the world, significance, legacy, what's your next? The provocations will always come up, but you have a chance to start seeing it earlier in life and not getting to the edge of the cliff and going, wow, if I sell my practice now, what do I do? Do I have enough capital? Who am I? All those identity crisis things that come up that I see over and over again. You've got a chance to plan ahead for it. So if you want us to help you create passive income through real estate portfolio so that you can stop relying on your practice, then the easy thing, and it's not a sales call, it's a discovery call, to see if there's alignment, to go through and get an understanding of what we look for. And if it's not the right time for you, we'll tell you and say, well, here's what you should go do first. Here's where we see you in your goal. We're not going to spend hours and hours on the phone with you, but in a 45-minute call, we can get some discernment, and we'll have you give us a little bit of information before that call so that we can jump right in and really get to the crux of what are you looking for? What have you done so far? What's your plan look like? And what might be able to change to make it go faster or get to where you want to go sooner. We have a Freedom Founders members event. Our members event happens in just a little over a month. The first weekend of April will be in Fort Worth. That's Dallas, Fort Worth, at the Omni Hotel there. And we do keep a certain number of seats reserved for pre-qualified guests. That's couples, spouses, partners, to come pre-qualified. And that happens through the discovery call. So if you're sitting there going, I've heard about Freedom Founders, sounds good, but boy, it sounds like there's a lot of stuff I got to figure out. Honestly, the best way to learn, again, if you're pre-qualified, and we'll help you do that, is you come to a meeting and you get to play all out, meaning you get to be involved in the whole thing. You talk to people. In my opinion, if you're going to vet something out, if there's other people who've been doing what you're thinking about doing, then you get to talk to them and say, well, is this the real deal? Or are these people that are not like me at all? Or something is strange here, or something's in the air? That's the best way. Most people are skeptical, and I would be skeptical too. When I'm thinking about making some life-changing transformations in my life, you want to be careful. You want to make sure it's the real deal. I can tell you it's the real deal, but this is a chance for you to find out if it's the real deal. So I would encourage you, wherever you're sitting tonight, and I'll answer some questions in a few minutes for you, but consider this to at least do a discovery call to see where you're sitting. All right. Just some pictures of some of our events. We're very relational. The hallway talk is absolutely as valuable as the presentations and panels that we do on the stage. It's a combination, and the people overall are the best of the best. Great people. If you're one of those, then you would love this group. So when you work with us, we'll help you clarify that individual plan, unique, specific to your situation, connect you with the vetted, those curated investments that right now you don't have a chance of finding because it takes work, network access, and due diligence. We'll plug you in with our entire community, where you have the support of our entire team, myself, and our veteran members who are great with mentoring and helping our new members. It's a super supportive community. The key, I would say, is the longer you put off building your portfolio, the harder it's going to be to confidently gain the freedom from your practice. The longer you wait, the harder it gets. If you're familiar with Joseph Campbell, he's the author of The Hero's Journey. He says, the very cave you're afraid to enter turns out to be the source of what you're looking for. Obviously, what he's saying is, don't let your fears stop you from looking for a better path, the path less traveled. That's the path that we take people on, and we give you the opportunity, if we think you're the right people, to take a small step, a baby step, just to check, just to peek ahead, talk to some people who've been down that path a little bit further and say, how is it down there? Is there any minefields down there? Anything I should be aware of? The longer you wait, the longer you have that process of analysis, just saying your life's probably not going to change. I'm not saying your life's going to be bad, but your life's not going to change. What is it you're looking for? Less stress, more peace of mind, more recurring capital. That's what I was looking for, and that's what I achieved in my life. So again, if you're a professional practice owner, business owner, you got, give or take, $1 million of assets that we can help you look at to see if they're deployable, then this might be your time. Also, if you are brave enough, and I say brave, tongue-in-cheek, to schedule a discovery call, it's not scary. It actually will give you clarity. Then we'll provide you an additional training I did recently to our group. We'll give it to you. It's recorded on the risk curve. I'm not going to tell you more about it. It's probably about 20, 25 minutes. no matter what you do, no matter where you're investing, it'll give you a lot of enlightenment as to where we are in the economy and will have meaning for you. You got to book your call by tomorrow night. Now, booking your call doesn't mean you have to have the call, okay? You just book it. You can have the call next week. But if you book the call by tomorrow night, we'll cut it off tomorrow night, then we'll automatically send you that training. I think you'll enjoy it. Our members very much enjoyed it. It gave them a lot of clarity about where we're on the market, because that's what they always want to know. David, tell us what you're seeing. Where can we hedge our bets? And again, whether you're in the real estate market or stock market, it will help you ascertain, in my opinion, where you should be allocating in general. Okay. So book by tomorrow night, have the call whenever. If you want to try to come to the April meeting, love to talk to you about that. You don't have to come to the April meeting. There's other ways for you to enter the Freedom Founders group, but having a call is the first step. And there's where you get the first call. You want to take a picture of that? I will also put it in the chat. Take a picture of that frame. Very simple. Few questions to answer. Book the call at your convenience. Just book it by tomorrow night. We'll give you the training. And Alex will put the same link in the chat. And with that, I'm going to jump into some Q&A, which I promised. So I went 11 minutes over my hour. I got close, which is at least my goal. So I'm going to stop the share. If you've taken a picture of the screen, if you want it, or you can go to the chat and pick up that link there, and I'll jump on. All right, Alex, if you're there, you've probably been having a chance to look at some of the questions. I'm not going to look at them. I'll just let you peel them off, and I'm happy to answer whatever we got.
Absolutely. Thanks, David. And feel free to put your questions in the chat. Everyone will see if David's able to get to all the questions tonight. Sometimes if there's a lot of questions, then David will follow up with a video, but we'll jump in and get started with a couple of questions here. First off, David, how do you still find real estate opportunities in the current market? The properties in my local network just don't make sense right now with higher interest rates, etc.
Well, so to answer that question, great question. And it is the conundrum for every real estate, quote, investor, whether you're active, as you sound like you are trying to be, or you're like me, you want to be passive, because we still have to invest through people who are active, right? It takes finding the right deals. My point is we're at the top of the market. In fact, we're probably slipping over in most of the assets in real estate. We're slipping over housing. But the problem is, as you alluded to, the valuations of real estate overall has jumped up so much. And of course, interest rates have gone with it, that leveraging right now, in most cases, just doesn't make sense, or you can't leverage very much. So you're looking at, as I said earlier, the traditional model, which is how most people got started. It's how I got started back in the 80s. Right now, you're going to have a very difficult time trying to do what you're trying to do. I'm not trying to be negative to you. I just would tell you to exude patience right now. You'd be better off if you don't have enough capital to be more passive. If you want to be active, I got it. You'd be better off just stashing that money in treasuries. I know it's not sexy. You got that FOMO. You got to get going, but don't wait a little bit longer. Wait to the end of this year. Wait till next year. And I truly believe that even in the housing market, which seems to stay resilient, but there's a lot of reasons why, I think we are set up for a consumer recession, which is what drives everything in the economy. Consumption drives 70% of the economy, including housing. The affordability crisis is going to bring prices back down. I'm not going to say it's going to be a crash. Different markets will be different, but I don't know where you are, but every market's different. And that's why I also don't necessarily say to people you should invest in your backyard. Even during good times, that may not be the best place. And that's why I love to be in a position where I've got access and a network to where I can spread my capital out to other places. Now, I didn't do that when I was young, like maybe you are. I stayed close, but Texas was a good place for me. It was kind of fortunate, timing-wise, for me to be there where I was. Today, I couldn't go out and reproduce what I did back in the 80s right now. I wouldn't try right now. I'd take a different course, but I know after the correction, that might be a time to jump back in and get involved in the equity side, the ownership side, like you're talking about. All right, that was a long answer to a very good question, but I hope that gave some clarity to the overall picture for you.
Thanks, David. Next question. What types of real estate does your group invest in? Multifamily, commercial, single family? What kind of returns do you typically see?
Yeah, all that. And you're talking about specifically the equity side, which is normal. We do invest in equities. I mean, we invest in a lot of equities. So yes, single family, multifamily, self-storage, mobile home parks, retail. And then we also do a lot of investing on the debt side, debt as an asset, which is really the best place to be today. That's where you get the more consistent, predictable, lower risk returns. You want returns. So let's go back. Equity side, when the market is going up, not now, the market's going up. We can do equities, minimum 12 to in the low 20s. But that's not the game right now. Okay. It's not the game right now. Right now, we're mostly focused. I'm mostly focused on the debt side, where I'd say anywhere from 10 to 16%. There's no growth, there's no tax benefits. But again, I'm playing the waiting game and keeping my money at least working at a decent rate, lower risk, and waiting to move that money, because I can move that money faster than I can move money in equities. If you're tied up in a syndication or you're owning rental properties, it's not very liquid, is it? Okay. Not the right time to be in those. But as I said, equities in traditional up markets are going to give you the higher growth. That's what we all want. The tax benefits, the appreciation. But right now, it's not time for that. So we've shifted and we can get more, mid-range returns, but a lot safer and with money that we can move quickly when the market suggests that we should.
Thank you, David. And then one last question here for tonight. My financial advisor has had me contribute to my 401k for the majority of my career. Most of my retirement savings are in the 401k. Did I miss the opportunity to use real estate using your blueprint?
Well, I'm not sure what age you are. That will have some distinction. It sounds like, you're at least mid-career, because you said for a number of years, your financial advisor. Did you miss the opportunity? Well, as I said earlier, you can self-direct, meaning you can invest your retirement account capital in alternatives like real estate. You can do it in all the real estate we do. You can't do that. You just have to move it to a self-direct custodian. So you haven't lost the opportunity to do that. That's open, and that's really one of the main things or first things that we often do with our new members is they typically have a chunk of capital, like you do, because they were disciplined. They put it there. And I'm not saying that was a bad thing. It's just incomplete. So no, you could move it. That's what most people want to do. When you're 59 and a half, of course, you can take distributions out. One of the, it's not a trick, and most people have heard of it by now, but you can still keep your money. If you're not 59 and a half, you have to keep your money, in the tax deferred environment until you're that age. But you could consider also doing the backdoor Roth, right? Converting money from your traditional account into a Roth, paying the tax on that contribution, and getting money into a Roth, which now, of course, is tax deferred and tax free on distribution. That's a move that a lot of people take, and you don't have to do it all at once. You can do pieces at a time, but that opportunity is still open. I bet that's going to be closed, possibly in the next 4 years. We'll see what happens with the elections and all, but I don't think it's going to matter who is running the administration, which side. I think it's the necessity for more revenue that's going to drive either side. And that means a lot of the things that we've been used to in terms of tax rates, in terms of retirement accounts, any of the other, call them loopholes, if you will. I don't think they're really loopholes. They're just tax opportunities that other people don't know about. But I think a lot of those are going to be closed down. And so whatever's available today, you have to say, well, what could I do today to grab it and be grandfathered into something that I might not have available later? So there's lots of things you can do still with money that's in a retirement account. It's not too late, even if you're 59 and a half or getting ready to retire. It might be a great time for you to say, well, I don't want to keep everything in the market, because personally, I think the market would be quite risky to keep a lot of it there. You could still keep some of it there. Be prudent about, with your advisor about shifting some of the risk out of the equities. But I think, putting some in real estate, if you like real estate, you understand what the benefits are, could be a good opportunity to balance things out and have a little bit more downside risk protection, plus still have, the inflation hedge. Because I think long term, after we get through the correction, whenever that comes in the next few quarters this year, then we're going to have long term inflation. So you're going to have to ride this kind of the roller coaster. Correction down, deflation, financial markets will come down, real estate's going to come down, and then I think we'll ride back up. There's no way for the government to absolve the massive debt other than through inflation. It's the only way they can do it, monetizing the debt. So that's going to be the long game, I believe, after we go through a deflationary reduction here over the next quarters.
Well, thanks for sharing tonight, David, and for unpacking all of that. And for those of you who still have questions and maybe you just don't want to put them publicly here in the chat, feel free to bring those questions to our discovery call. And I've seen a few of you have already moved forward with scheduling that. That's one of the things that I love about having conversations with docs, is just trying to find the key inflection points or find where you're stuck and look for clarity, look for a path forward, whether that's with Freedom Founders or in a different direction. We just love to be a catalyst for folks and help create some clarity and provide a path forward. And so I'd be delighted. Look forward to having a conversation with those of you who've scheduled and looking forward to it. So thanks, David.
Yeah. In any case, thank you all for being here and being engaged tonight. And you can still, whether you take a step forward or just want to follow us, we've got the podcast, Dennis Freedom Blueprint podcast. I've got a YouTube channel. Put out a blog every week. So if you just want to stay connected, love to stay connected at the right time, whether that's now or later. Certainly don't be afraid to jump in and get some clarity on your plan. I think that's, as Alex said, that's the one thing that we're really good at doing. We've just done this long enough. And we're not salesy at all. We really want people that we can really help. And if that's not you at this time, no harm, no foul. We're happy just to have a conversation and help you with the clarity that you might need to take the steps that will move you to where your goals would have you take. All right, we'll shut it down tonight. Everybody, have a great week, and hopefully get to talk sometime soon. Take care.